Good morning, everybody. I cannot tell you how pleased we are to see the room almost full. We were scared and worried. We were talking for the last 10 minutes. It's too early in the day. But thank you, everyone, for joining us. You want me to... Is this better? Can we get the audio up a little bit more, please? Thank you. Suma, gentlemen, welcome. And thanks for taking the time early this morning to join us on this discussion. Change makers leading from the front. While it's an open-ended topic, I think we have... are you able to hear me clearly?
Bits and pieces.
Okay, I'm going to just move closer. Yeah. We're going to try and... hopefully this helps. All right, we're going to jump right in, everybody. The idea here is to have really some interesting thoughts coming out of you from an industry standpoint, from a brand standpoint. Trisha has already made quick introductions, so we'll jump right into it. Andrew, I'm going to start with you at the very end. Accor, and we all know Accor's India presence for the last many years, and we know your traditional brands. I'm going to actually jump right into your other side of Accor. So the lifestyle and experiential side of hospitality that Accor does so well, 25 hours, Mama Shelter, Rixos, SLS. So Andrew, as I was saying, the lifestyle brands that Accor has so beautifully built over the years, and I was naming a few, 25 hours, Mama Shelter, SLS, Rixos, Handwritten most recently that we've been hearing about. When do we see this in India or South Asia at large? What's the plan there?
Great, thank you. And I have to say, I can hear with that mic too, so which is good. So good morning all. It's fantastic to see all of you get up bright and early. I was a bit concerned whether we'll be talking to quite a thin actual group, but it's great to see a lot of people here. So yeah, so Accor, we have probably the largest actual collection of lifestyle brands, dedicated lifestyle brands. It is in a group called Ennismore. We have 14 lifestyle brands. You obviously mentioned a couple of them. In terms of India, our plan for the lifestyle brands is on a highly selective basis. We are very careful because we want to ensure it's in the right location and most importantly with the right partner. What do we mean by the right partner? A partner who has a passion and understands what lifestyle is. Because the typical lifestyle hotel, compared to, dare I use the inverted commas, a traditional hotel, it is very much a separate beast. It's very high on F&B. There's a lot that goes into design, not just for the hotel, but the F&B concepts as well. And the operating platform is also very different as well. Just to give you an idea, out of all the existing Accor lifestyle hotels, the room revenue and F&B revenue is 50-50. 50% of the revenue comes from F&B compared to a traditional hotel, it's 20 or 30%. So in terms of India, we would only be looking at Tier 1 low locations, Goa, Delhi, Mumbai, here in AAA locations, and as I said, with the right partner. Interesting, we have not set any growth targets in India for our lifestyle brands.
Thank you. I can take from that at least some of these will find their way into India sometime soon.
I certainly hope so.
Thanks. Anuraag, welcome. As both as a luxury and a leisure brand that Leela does so well in, my question to you is, do you find this present upcycle to be long-term sustainable? I'm not talking 6, 12, 18 months. And more importantly, the single biggest complaint owners have had in India is that we don't know how to do great ADRs. And we don't know how to do a Maldives or a Seychelles or a Dubai or a Singapore even. I think we're getting there. Do you think that's sustainable as well? Are we going to see these strong ADRs sustain themselves?
So thank you, Achin.
I think the short answer, yes. We definitely see this upside continuing, and it's not just a factor of demand and supply in the luxury space. It's also the fact that I think we have kind of reset, India has reset the thinking and the thought process behind price positioning. Even today, South Asia is comparatively in the luxury upper upscale and lifestyle brands is on the lower end of the spectrum compared to any other similar or even close product. Yes, that's going to continue. What's also happened is, I think post-COVID, most organizations kind of reimagined their pricing philosophy, and there was the baseline shifted towards the higher end of 20-25% on the static rates. So that's going to continue with the new baselines. So we see that growing for sure. What's very important, despite these tailwinds, is to be mindful that eventually 3 to 5 years from now, once the gap between demand and supply in the luxury space I'm talking about is narrowed, what are the brands doing in terms of luxury programming, experiences, focusing on bringing value to the guests and the consumers? How agile are we in terms of our pricing, especially the dynamic pricing? We all talk about using technology to drive discretionary spend and on the retail side, which in most cases is 45 to 50% of the room's revenue. What are we doing on that programming? And we heard a lot in terms of how we see the demographics of the luxuries consumers change. What they are seeking are experiences rather than just a product. Even the mindset of how do we sell and preposition our offerings from a product to an experience and a program to focus on length of stays. All those things have to come into play to ensure that this growth is sustainable and long lasting and a reset of sorts. To your second question, I think when you spoke about the certain destinations, for sure, I mean, they have done it brilliantly. There are some amazing examples of how they have captured on in-house, because they have a captive customer client, and how they've ensured that during those 3 to 5 nights when people stay in such resorts, if that was your question, how they have ensured that they are able to make every moment matter and monetize that moment. Yeah.
Lovely, thank you. Sure, Jatin, please go ahead.
Sorry, I just wanted to make a point. I completely agree with Anuraag, but if you remove the luxury space, and even look at smaller markets, we're all driven by data. It is first time that the new supply is getting consumed in a lot of markets. So that's why what you're talking about is very much sustainable in short and long run. I'll give you a very simple example. If you look at how the domestic consumption is changing the demographic in the landscape, first 10 days of March affected by Holi, first 10 days of April affected by Good Friday, Easter, first 10 days of April revenue is better than first 10 days of March, at least in our portfolio. And what really shows is that domestic demand is driving that for you. So I think you're pretty much in that phase, I would say.
In fact, very interesting you say that, and I couldn't agree more. It was a very similar conversation I had with a few owners where there was a clear, marked difference between how global holidays actually instill domestic demand in India, because it may not necessarily be an Indian festival, but it allows the opportunity for the Indian to travel and take a little break. Jatin, sticking with you, the Sarovar group obviously has gained significantly in scale in recent years. I think the question I have for you is that besides Africa, where you have somewhat of a presence, is Sarovar still largely India focused, or are there plans to spread your wings outside?
Look, you cannot take India away from us. Today we operate 103 hotels, and we've got a robust pipeline, almost 40 in pipeline in the next 36 months. But the good news is that we've got a lot of interest from other places as well. In next 24 months, we've got almost 3 hotels opening up in Nepal, 3 more in Africa. We've got a lot of interest from South Africa, from Bangladesh, from Middle East. So those are good times. And now with Louvre as our principal partner, that also gives us more brands to kind of work around with. So yes, we have a lot of interest from other geographies as well, if you ask me.
Great, thank you. Suma, good morning. And this is more an open-ended question, because I am curious personally, and I'm sure a lot of people in the audience as well. Correct me when I'm wrong. Taj, I understand, had been voted the strongest hotel brand in the world and the strongest brand overall in India not too long ago. And the legacy is phenomenal. I think there's no two points about it. My question to you is, even the stock market's been very rewarding our IHCL. Everything looks up and hunky-dory. Things are good, things are great. Where do you guys go from here? Are you already at a great peak? Are you going to stay there, or is there a new peak you're looking at? What's the next 3 years like?
Well, good morning, everybody. Achin, you're right that we have embarked upon this growth path, and especially in the last 5.5 years, the company has probably the fastest growing company in the country in the hospitality sector. When we started this journey in 2018, we set our aspirations, and we called it Aspirations 2022, to reach 25,000 rooms within our portfolio. And despite the pandemic, despite the various challenges that the entire world faced, we reached this milestone ahead of its time. And having met that, we set ourselves further audacious goals, and what we call the company's call for action, Avan 2025. And we said that, look, we need to focus on scale, profitable growth, and we're targeting at least 300 hotels by 2025. That's over the next 3 years. And it's not just hotels and rooms, but also focusing sharply on margin enhancement, and our target is to bring in at least 8% of margin enhancement from the time we started and announced our Avan 2025 in early 22 to 33%. And almost 35% of this EBITDA margin, or this EBITDA, would come through our new brands, that is Cumin and all our expression brands and the reimagined Ginger. So, and given the way we have performed in the last 3 years, like last year we signed 31 hotels and we opened 17 hotels, and we followed the April to March financial year, so we closed this year with 36 signings and opened 16 hotels over the last 12 months. So at this run rate, I think I'm fairly confident that we will reach our Avan targets ahead of its time yet again. And it's not only about growth and numbers. For us, the company is also focusing on everything that takes to handle this growth, to absorb this growth, and to manage it in a profitable way, which means whether it is getting our products in ship shape, getting the right people, building talent, and all those issues that the industry is facing with, and all those requirements to make this growth really meaningful for us and for our partners. I think that's where we are heading to.
Thank you. And Suma, you've touched on two things that were playing on my mind as the next question for Andrew, so I'm going to carry with that theme. Andrew, I'm hoping this one is more, you can hear me more clearly now? Am I audible? Okay, good. Being growth and the other being talent, Suma just mentioned. Accor, South Asia, and both of these levers, from a growth standpoint, what's the plan? Your core brands we discussed briefly are already in a meaningful way present in India. Congratulations on the signing yesterday, by the way. So what's I would say, the 3 to 5 year plan from a growth standpoint? And equally, it's been said a few times in the last day and a half already, our single biggest challenge as an industry is quality talent across the spectrum. How is Accor addressing that in this part of the world?
Yeah, okay, so let me deal with the first part, which is growth. So, we currently have 58 operating hotels. We have 30 hotels in the pipeline. We are going to get very aggressive. The last few years we haven't been as fast in growth as we would like. We feel the time is now right. So our ambition is, in 5 years' time, when I'm sitting on this stage, that figure should be 200 hotels. People might say, well, that's a pretty far-reaching goal. It's not. It's a 20% growth a year. Last year we signed 10 hotels, 1,400 keys. That was a 15% growth. So our vision is to get more aggressive, to get flexible, to be owner-centric. We're going to get far more aggressive in rolling out franchise options for owners. We're going to hit the Tier 2, Tier 3 markets. We're going to push our Mercure and Grand Mercure brands specifically tailored for conversions. We see a lot of opportunity there, especially in Tier 2, Tier 3 cities. And be prepared to reach into our back pocket and open our checkbook for strategic deals, especially in our premium brands. That's our ambition. In terms of talent, I look after Asia. This talent issue is not just limited to India. We have talent issues throughout pretty much the globe. The issue is attracting talent and keeping talent, and the generation, I lose count, is it Gen Z now, Gen X, I forget, but anyway, the new generation, their view on working in hospitality is very different to what it was 10 years ago. So we as hoteliers, we have to adapt, and I think we are doing that slowly. I think we can do better. I'll give you an idea. In France now, we are running trials in some hotels where our associates don't have to work weekends, or they only have to work 4 days a week, and they can pick what days they want to work. It's bringing that sort of flexible thinking into the hotel that is suitable for this new generation. Career progression is very important for this generation as well. So putting in the platform to allow career progression is crucial, but also what's very important, that's underpinned by growth. I lose count how many young men and women I run into in our hotels who are serving me some food or serving me a coffee, and their ambition is to be a GM, and they want to be a GM within 10 years. That's possible. We can train them to be that. We need to get the hotels to give them that opportunity.
Thank you. Anuraag, and I value your views on this challenge with the talent conundrum as well, but I'm going to add a question to that. Please feel free to answer both. We all know of Leela's legacy in the luxury space, of course. Wouldn't you agree it's about time you guys had something in the upscale, mid-scale space? Do you want to spill any beans? Is there an announcement, or am I just pushing you in the wrong direction? Any brands that you're thinking of creating in the mid-scale space?
No. We deliberately and mindfully, want to remain and grow the luxury space as true Indian luxury brand coming from India. Our goalposts are different. Vision is, and I don't have any such numbers to talk about. We're not even looking at numbers on that spread. The way we see growth is very different from what my other colleagues on the panel are alluding to. So we are being strategic about our business development and where we want to be, rather than in a sense in an expensive opportunistic mode. So we have no such plans at the moment, and if I can say in the near future, in terms of getting into upper upscale or mid-scale. Now, but I'd like to just pivot to what he spoke about in terms of talent, because growth for everyone in this hall, actually in this room, depends on how we view our human capital. That's something that's like, we always known that there are many brands who talk about putting, them right up there as a priority. But I think the time has come, it's like walking the talk. There have been too many panel discussions in terms of what are we really doing for talent, and we all know now we have Gen Z serving millennials. There is at least I can talk about India, the concept of work-life balance at the operative level in hospitality is something that we'd like to talk about. But people have to work long hours on weekends, food and beverage comes alive after 9 p.m. and so forth. So how are we treating that? I think what really has to change, and we have tried to do that and we continue to do that, is treating it as an investment and not a cost. the first discussion that you have with anyone is what's your payroll cost as a percentage and an absolute. So that approach needs to be looked at differently. Secondly, how we are shifting the baseline, not just on the but the actual rank and file entry level salary. How many organizations are willing to invest that kind of resources behind the most important resource? And then of course the career planning and succession and training and ensuring that they become general managers in 10 years. So all of that has to actually change, and the time is now. Because I think all these growth plans that we are talking about, unless we have the right kind of people who are opting to continue and working in hospitality, none of them can really deliver. And if I go back to what I said earlier, it's great to command $500, $700 average rates. And there are some resorts who are commanding $1,000 plus during peak months. But we need to have the service levels and the experience levels to be able to command those kind of rates, which requires a certain, training, upskilling, sourcing of the right talent. So I think it has to start with a baseline. That what are we doing for the first 3 years of a career of a young Gen Z associate who has opted to be a part of this business.
Thank you. And Jatin, sticking with the same theme, you operate hotels both in the mid-scale and upscale space. Your thoughts on how you're cultivating the talent quotient for your organization and how one can improve on that?
So, our market's a little different from a tier 1 market, and it may sound a little cliche, but the issue comes at ADR, which is acquire, develop, retain. And the issue comes at ADR, which is a very cliche thing to say, acquire, develop, retain talent. I think it's the retain part. I fell in love with this industry by chance. I didn't want to become a hotelier at all. I wanted to become a teacher. But when I got into it, I got sucked into it. But my only reason for staying back was that I could see my career moving. I've had the pleasure of living in 5 different countries and living through so many cultures and all that stuff. So what you do with your people in that space is what is going to change. You retain them, you train them, you show them a career graph is very important. I'm proud to tell you that in last probably 2 years, especially while we were in pandemic, especially within our company, we've been able to move people up the ladder. Internal transfers. We've recently started a new program where we're developing all our number 2s to become hotel managers or general managers, and it's only a 8 to 12 month program. I can sit and make a 24-month program, but it's only going to lose the talent. So what you really want to do is you want to invest in your people and you want to keep on letting them move up. Your people will never be 100% ready. If somebody was looking, if Ajay was looking for a 100% ready guy, maybe I was not that guy. Or, if somebody else is looking. So you always got to bank on it, you retain, develop, and you keep on pushing the envelope. Is that what I would say? And that's what we're trying to do.
Okay, thank you. Suma, I'm going to shift gears, and you've shared some interesting numbers with us, 300 hotels soon, and so on and so forth. A couple of questions. Does IHCL franchise? Does IHCL lease? How does IHCL grow? Is it just management contracts, or are you going to look at these alternate vehicles?
So I think in the last 120 years of our existence, and until maybe 30 years ago, we were owning and operating all our hotels, right? So since then, over the last 30 years, and I would say that's when we actually went out, partnered with people, we opened up to franchising and operating. So we manage a lot of hotels, and mind you, our brand, the Taj, it has a huge emotional connect with the whole nation and the country. So with that comes this huge responsibility of maintaining the integrity of that brand, and this brand, and the first flagship hotel was started with a larger purpose, right? It was not just another hotel brand. So, so we are all very cognizant of the responsibility that comes with working with such iconic brands, that we want to tread this path carefully. Now, that is to say, will we lease properties? Of course we have. We have leased some of beautiful palaces because you cannot own them. and some iconic properties we have leased in the past. We have worked with the governments to lease land, so leasing is not new to us. And when we launched our reimagined Ginger brand, we said we will do operating leases. So we do leases in different forms, in different measure for different brands within our portfolio. In fact, our Avan 2025, the call to action which the company announced early 22, we said that we'll have a right mix of approaches to growth, which means we will do asset light, we will go out and manage hotels, but at the same time, we will also invest our capital and build some iconic properties across the country. But we'll reach a healthy mix of a 50-50 kind of manage to own portfolio, and I think we are almost there. In terms of franchising, we feel that we need to do it as of now carefully. There will be few that we will test. There will be few brands that we will probably consider for franchising, and we have started that in a very limited way. But like they say never. We all know world over franchising is the fastest approach to growth. But we want to grow responsibly to our owners, to our brands, and to the group and the company that we represent. So that's how it's going to be.
Okay, thank you. Andrew, before I come back to you, ladies and gentlemen, if you have any questions whatsoever for the panel, feel free to write them on the conferencing app through Slido. I'll make sure I try and take them as we go along. Andrew, since you have a larger region to look at, it'd be interesting for the audience, I would imagine, to hear from you about what markets post-pandemic have actually performed the best in your region, and which ones have lagged, unfortunately, as well.
Yeah, that's a pretty simple answer. None have lagged. It's, you know, the last quarter has been, you know, as you've heard on stage with actually many people, it's been a record-setting quarter for both top line and bottom line across Asia. Probably the best performing market to date, if we look back over the last 12 months, has been Singapore. Our hotels there, you know, typically it's $500 a night. They run at 95% full. They are just money machines. The market that's been lagging is the Philippines. That's probably the actual laggard, but that's now beginning to pick up. Japan, if I was sitting here 6 months ago, I would say it is Japan, but that has completely turned around. That's probably the fastest turnaround and growth market in Asia in terms of rates rising. So, and then all the rest, Vietnam, Thailand, Malaysia, Indonesia, you know, they've all been very strong.
Okay, thank you. Anuraag, back to you and the topic of luxury and both product and service. The one thing that I've always wondered is a brand as strong as the Leela Group, why are we not seeing these outside our nation? I mean, One and Only and Mandarin Oriental and Cheval Blanc and all of these are global luxury names because they've spread their wings as well. When do we see you do that?
So, time, I think, as I said earlier, we recognize that we spent the last couple of years to ensure that we create an organization that can scale up in the luxury segment, and then eventually we need have nationally as well. There are a few source markets which are very, very relevant to us in India, where we believe that the brand recall and recognition is the highest. So we probably will start with those source markets first, and in the luxury space with the Leela Palace brand, the flag is appropriate. So it's very much as a part of our vision and our business strategy.
Okay, thank you. I'm looking at questions as they start pouring in, so I'll try to take some of them as we go along. I like the first one there, Jatin. Perhaps you take a stab at it. One crucial room feature that you think can make or break your stay. Yeah.
For me, great internet, absolutely important. We are all an example. As soon as you get into your room, that's first thing you do, in my opinion. So I think that's a must today, and at a good speed and connectivity which is seamless. So that's very, very important. You've got to be connected all the time.
Couldn't agree more. Thank you. One more question for you from my list here. I wanted to just, and this is again a fun question actually. If you had to choose between having a hotel on the moon or underwater, which one would you choose and why?
No, this can't be for me. This is for you.
This is for Jatin. We want to see a Sarovar either on the moon or underwater.
We were trendsetter in mid-market, all right? And I think there's enough of underwater happening, hotels to restaurants and all. And I think it was last week only when we were reading that India is overtaking or looking at, space and looking at China, overtaking them with a $447 billion investments. So I think I would prefer to go there and be a trendsetter. Now, whether in mid-market or which market, that's very hypothetical, but not in underwater, maybe for sure moon. Yeah.
Okay, I see a question there which may be a little bit loaded, but I'm going to pose it to you, Suma. All brands talk about focusing on younger guests. Who is the youngest in your boardroom when you develop strategies? How do you feel the pulse of the youth? So the IHCL corporate meets, the ExCom meets. What's the youngest person sitting there? How old is he or she?
The youngest person is probably right here. So, youngest person about 42, 43? Yeah? Yeah, so that's the youngest person in our ExCom. And of course, I'm not too old, Achin. I'm just a few years older than her, that's all. So you can say we have many young people within our, the executive committee and the boardroom. And how does the impact brand standards in? So the thing is, it's not about just standards equating young people, right? Young people around you bring a different kind of energy, a different kind of approach to things, and different kinds of conversations, because a lot of young people either live in the present or live in the future, right? I mean, you have lesser people who say, oh, in our times it used to be like this and things have deteriorated. So I think young people really bring in that positive energy to look forward to what newer things are happening, not just amongst us, but within the world around us, and help us keep abreast with, where the world lays ahead or where we are actually heading. But jokes apart, it's not only the boardroom or the people within the room. There are processes, there are systems, there are ways to capture the voices of our customers. So eventually, we are not building hotels for the 8 or 10 people that sit within the boardroom, and we play across every segment of the market. So from luxury to mid-market to upscale and upper upscale end. So eventually it is the customer and the voices and how well we listen to them. And yesterday, I know in one of the conversations they said listening to your customers and how passionately you listen to what the voices around you are. And I think that's what really drives us in keeping our brands abreast of our customers and the times to come.
Yes, Jatin, you want to add something?
It's just not about age. Let me put it this way. Yes, I can tell you there are two youngest members, one in revenue management and one in marketing, of our colleagues who are always, coming with ideas. But I think it's about how receptive you are. And if I look around where we are, I think for us, Ajay is the youngest in our team who's very receptive, open to ideas. We were discussing something a couple of weeks back, and in an ideal scenario, probably Ajay should have said no, but he said, go for it. So it's very important how open you are to the new ideas and how curious you are to do it. And that's what will always keep you in the race and abreast with what's really happening in today's scenario. That's what I feel.
If I may add, yeah, please.
Take a moment and add, well, I agree with you that young is not just young physically and age-wise, but it is important to stay young, to be surrounded by young people around you. So I think, therefore, eventually the state of mind is really dependent on the young energies around you. So if Ajay is staying young, I'm sure he's surrounded by a lot of young people like you.
He's surrounded by me, so that's why.
Yes, Anuraag, you want to...
I think this is becoming a very interesting topic. Yeah, so I think it's all about learning agility. I think that defines your age, in my opinion. So how upwardly mobile, learning agile are you in a sense? And by mobility, connectivity and ability to... so we, and I know Anjali is in the room as well, we are deliberately looking at 20-somethings to be something to teach us how they can really pivot and be the bridge in terms of social media, digital marketing, capturing the voice of the customer. Because what we learned yesterday in the Google presentation, it is the 18 to 24 which is making decisions for people who could be 40 and 50 years of age. So it's like Gen Z, whatever, making decisions for Gen X and above. So I think, and also in our Leela ecosystem, almost 30% of our leadership team are in their 30s. So that brings in a perspective. And we are like, give a couple of years here and there, we are nearly there.
Couldn't agree more. No, and if I may add 2 cents to this, because it's a topic of interest to all of us, clearly. We run a very young team at Hotelivate as well. We've always believed in that. And a big part of, right, like you very rightly said, Suma, a big part of this has nothing to do with age, but the fact that perhaps a generation or 2 ago, you did need to work for 25 years to learn a bunch of things. That's very different today. We're in a very different environment where learning's been fast-tracked. We live in a very connected age. So you don't have to be 50 years old to know enough. You may know a lot more at 30, and to acknowledge that is something that leadership needs to be comfortable with. And that's how you'll see that. But back to you guys. Andrew, somebody wants to know for Accor, which is the brand that you think can be the first to touch 100 hotels in India?
Yeah, one part of me says Ibis, but if I had to take a bet, it would be the Mercure brand. I think that will be the one which will hit 100 hotels first.
Thank you. And one more, if I may ask you another question, rather open-ended, but what's that one most important lesson you've learned in your career that you would like to pass forward to the next generation? That's to you again, Andrew.
I'll go first. Patience.
Patience. You want to answer that as well, Anuraag?
I didn't learn that lesson yet.
Okay, I'll take another one from here. Anuraag, what is your take on revenue per square feet, like Manav spoke? Do you employ this metric?
Yeah, I think it's absolutely relevant, and I think there are a lot of people from the real estate world in the room today. It was always around, but I think as operators and as general managers, we probably never thought about like it that way. We were never really mindful of how many square foot we have deployed to generate the kind of returns, and if we were to pay rent on it, or if the area was leased out. So that has really come to the fore, and I think we see that very often, that all our general managers, or most of them, treat the monetization of the asset and how they can treasure hunt and how they can bring revenue per square foot. It's always a great benchmark to compare different asset classes. What would be the EBITDA per square foot? Let's say you have 7.5 lakh square foot deployed in a palace hotel, let's say in a metro city, kind of a, and then if that was leased out to a category tenant, what kind of EBITDA per square foot was. So we do that a lot. Obviously a part of the ecosystem that we work in, that's also helpful for us. So it's very interesting when we see that in food and beverage, especially because food and beverage earlier used to be all about is reputation, local dynamics, creativity and all of that stuff. But when you do this kind of a calculation, some amazing results and startling results come out when you especially do this for food and beverage.
You know, music to my ears as a numbers person, right? If you're not just looking at revenue per square foot, you're doing yield per square foot or EBITDA per square foot, even better, because you're now separating the successful from the not so successful, and you're being able to analyze where you're sweating the asset appropriately. Jatin.
Yeah, you know, there's another thing. No, we do not deploy that metric in our, balance scorecards or anything else, but I definitely feel that hotel industry has to move out of their very traditional pricing style of supply and demand. We need to start looking at parallel industries and look at buying behavior history pricing, which will start giving you total hotel revenue management. And I think if anything which is really, we've not done very well over the years is that we've not improvised or innovated enough in our industry in that space. Digitally things are moving in a different direction, but we're really not moving at that pace. So I think that per square foot, probably a total hotel revenue management or whichever way you want to talk, I think that's really the need of the hour if you ask me. That's how I would look at it.
Sure, thank you. Perhaps not your core responsibility, Suma, but for IHCL, the first question on top. What is, I would say, IHCL doing to solve these problems of breakfast, check-in and check-out wait times? All big hotels in one shape or form or the other seem to have this challenge. And I'm not basing this just on you or IHCL. Anybody in the panel is welcome to answer.
I think it's all about digital once again, especially check-in, check-out. I clearly remember when I started in industry, we used to have express checkout where a guest would fill a form and drop it in a box. Now you can still do that digitally, so that's one thing which needs to come back. I remember in between hotels that started that you could view your bill on TV screen and do checkout. Those things have gone away again. So we got to bring some of those things back. But yes, digital, which can really take care of your check-in, check-out time. You got to be innovative with breakfast in the sense that you got to look at your house count, how are you going to divide. It's a very operational excellence question. But yes, there are ways and means which you can do.
I think we're getting a few very interesting questions from the audience, so I'm going to stick to that. Anuraag, if I may go back to you, and then Suma, you as well. What is the panel's view on Northeast India? Which areas are in focus, if any? In fact, all four of you, please feel free to jump in.
We haven't gone that far east yet.
Andrew, are you looking at
I will
Northeast?
leave it to my esteemed Indian colleagues to answer this one.
Okay, sure. Suma?
So, as far as our company is concerned, I think we have a reasonable presence in the eastern part of India. And when I say eastern, not northeast only, but you can include Calcutta, West Bengal, Jharkhand, Bihar, and the Seven Sisters. And even in northeast, I think we have been probably one of the early ones to enter with our first Vivanta hotel in Guwahati. Actually, northeast is of great interest not just to Indian hotels but to the Tata group. And as a group, we have always not only been pioneering destinations, but we have been doing great work in nation building. So for us, taking Northeast or showing Northeast to the rest of the world and bringing in growth and prosperity to that region, and it's beautiful, the entire Northeast, I think is equally important for us. And as we speak today, we have almost 15 hotels in pipeline. We have multiple gingers already signed, and you will see us having significant presence in the Northeast. The government has also helped the whole process by improving infrastructure, improving accessibility to the various nooks and corners of Northeast. And our endeavor is to bring prosperity to the region and expose or to display the beauty and great opportunity that Northeast has to offer to the rest of the domestic travelers and also to the global travelers that come into India. So we are doing a lot of work in the Northeast.
Anuraag, were you looking to add to that, or shall I move to the next one?
No, I think I'm good.
Okay, good. I'll come to you on the next one then, Anuraag. Is there a feature of another industry you think is long overdue in the hotel industry? Can we learn something from any of the other sectors or industries that they do well and we just don't?
So I think there's a lot of, on the e-commerce side, when you look at some of these big players on the e-commerce, on the marketplace, there are certain products that we have in our business where we can do a lot better, learning from these giants. The other industry was, of course, airlines, and we are bridging the gap, which was the revenue management, the revenue per square foot, revenue per seat, the pricing, the agility and dynamic pricing, all of that. Those gaps have reduced a lot in the last few years, usage of technology, adoption of technology, but there's a lot more we can do with some of the leaders in that industry.
Yes, Andrew.
Yeah, I'll just add, what industries could we learn a little bit from? I have two. The first is cruises, the large cruise boats. All-inclusive model, you get in there, many activities, shows, live music, 5 places to eat. We can learn a lot on how they do that. We do that in all-inclusive resorts, but how many all-inclusive resorts are there out there? How many all-inclusive brands are there out there? There's not many. I think that's something which we could address. The other one I would say we can learn a bit from is rental cars. We mentioned the check-in and check-out. The most painful experience for a guest during a hotel, and I think for many here, you all know it, it's check-in and check-out. Okay? It is frustrating, it is painful. When you rent a car, it is easier to rent a car, pick it up and drop it off, than it is to sometimes check in and check out of a hotel. Food for thought.
Thank you. We have 2 minutes left. I'm going to pose this last question to all 4 of you. Suma, will begin with you. If you could have dinner with any famous hotelier from history, who would be and why? I think I know the answer, but I'm going to...
So, I have worked, the only company I have worked for and the longest period I have worked for is Indian Hotels, part of the Tata group. And when I look back, I'm always amazed, with the way this whole IHCL started with the first hotel, set up by J and Tata. And the entire enterprise and the economic value, it's not about just the number of hotels, but number of people employed, the other ancillary businesses. So it is just larger than just setting up hotels. And I think the vision to bring the best hospitality, the very first, air conditioning systems, elevators, power, all of that was like a huge vision, which I don't really see many thinking like that. So the short answer is, if I could go back in history and have an opportunity to have a meal, I think I would like to have it with Mr. J and Tata.
I think a lot of us in the audience would like that as well. Jatin?
For me, this is off my bucket list already. I was fortunate enough in 2015 had dinner with Mr. Bill Marriott when I used to represent India Business Council. And I think it was a great experience where he walked us through his garage showing all his sports car and all that stuff. So I think that's off my bucket list. But if you ask today if I want to, I would say no, we're always surrounded by hoteliers. I'll probably think of something else.
Fair enough. Anuraag?
Honestly, I would really like to spend some time with the legendary Captain Nair. It's a big miss. I never had the opportunity of working with him. And I tell you why. Because every time when I walk into, I'm humbled by the fact that palaces, the vision, the authenticity, the detailing, the focus on the best of materials, uncompromising standards, and despite everything that was going on, and the vision and the foresight to put it all together, the painstaking detailing in every inch. So it's really something I would have required, and it's daunting and humbling at the same time that to carry that legacy forward. So this is something I would really look forward to.
Indeed.
In another lifetime.
Indeed, indeed. Andrew, finally, over to you.
I see we've run out of time. Yeah, I'm finding it difficult because there are so many good choices. It's really, really difficult. But I'm going to look more in the modern times and the big picture. I think Arnie Sollison, what he created with actually Marriott, the merger of Star, Worldwood, creating what is, you know, the largest and probably the most dynamic international hotel operator. I think that's something to obviously aspire to. Yeah.
Okay, thank you. On that note, Suma, gentlemen, thank you for being candid. Thank you for being fun. I hope you guys enjoyed this. Thank you.